All right, let's get right into it. Today, we're going to unpack some pretty turbulent forces that are rattling the economy. We're talking everything from deep market anxiety and crypto's wild ride to the double-edged sword that is AI. Okay, so let's just start with two words that I think capture the mood perfectly right now. Markets are bleeding. You can just feel it, right? There's this real sense of nervousness, uncertainty in the air. And honestly, it's for good reason. So to really get a handle on this feeling, let's just take a quick look at the damage from the past week alone. It's been a really tough ride for some of the biggest names you can think of. And what's so striking when you look at these numbers is just how widespread the pain is. I mean, this wasn't just one sector having a bad week. You've got chip makers like Broadcom and NVIDIA, tech giants like Microsoft and Apple. Pretty much no one in big tech was spared. It's just a sea of red out there. And look, this isn't just a few stocks having a rough time. The whole market, the S&P 500, has crossed a really critical line. For traders, that 200-day moving average, that's a big deal. Breaking below it is a technical signal they watch like a hawk, and it usually means we could be in for more volatility, more nervousness ahead. Okay, so let's switch gears and talk about crypto, which, as always, has its own unique and way more complicated story going on. There's this crazy tug of war happening right now between just pure fear on one side and some really serious progress on the other. So here's the thing. You've got this deep contradiction playing out in real time. On one side, the sentiment is just in the gutter. We're talking extreme fear. Risk-adjusted returns, they've been terrible for about a year. You've even got big banks cutting their price targets. But, and this is a big but, at the exact same time, there's some huge foundational progress happening. You've got money flowing back into the ETFs, a massive security upgrade being tested, and it looks like real regulation is getting super close. Yeah, and let's just pause on that quantum proofing for a second, because this is a huge deal. One of the biggest long-term fears that's kept the big traditional money, the institutions, away from crypto is this idea that future quantum computers could just break its encryption. So tackling this head-on, that is a major, major step toward long-term viability. All right, let's shift gears again to the other massive disruptive force out there, AI, artificial intelligence. It's a classic double-edged sword, right? It's creating incredible value in some places, while also being a straight-up existential threat to others. And this is a perfect example of that destructive side. So take a company like Figma, super popular design software. Well, Google just dropped an AI tool that does pretty much the same thing, for free. This is the new reality for a lot of software companies. A giant like Google can just build a feature that makes your whole business model basically obsolete, like overnight. So that begs the question, right? If AI is so good at destroying things, where is it creating? Where are the brand new markets, the new economies that AI is supposed to be unlocking for us? Well, it turns out the answer is already starting to emerge, and it's in this really fascinating new space, automated agent-to-agent transactions. Just think about that for a second. It's like a whole new economy where AI programs are paying other AI programs for data and services all on a blockchain with zero human involvement. And if you look at the early days of this new economy, it's just been completely dominated by Solana. It's handling almost all of these machine-to-machine payments. Okay, so we've got all this crazy tech disruption, but why is there still so much anxiety just bubbling under the surface? Well, to answer that, we've got to zoom way out and look at the huge storm clouds gathering on the big economic horizon. And really, it all starts with this one number, $39 trillion. That's the new U.S. national debt. And the scale of that, it's almost impossible to wrap your head around. But that's the starting point for understanding the pressure the whole financial system is under. And when you start to break it down, the math gets, pretty scary. You've got interest payments alone at over $1 trillion a year. The debt itself is growing by another $2 trillion every year. And who's supposed to pay for all this? A base of roughly 50 million significant taxpayers? You just look at the numbers and they don't add up. And this pressure isn't being felt equally by everybody, not even close. In fact, the data shows this staggering disparity, where the top 10% of earners, just the top 10%, are now responsible for half of all consumer spending. An economy that's that top-heavy is, incredibly fragile. And as if all that wasn't enough, a classic recession warning light on the dashboard is now flashing bright red.
Oil is over $100 a barrel. And if you look back at history, pretty much every time that's happened, a recession wasn't far behind. Think about it. Expensive energy makes everything else more expensive, and that can just grind an economy to a halt.
So when you put it all together, what do you get? You get this powerful central tension. We're kind of caught, right? Between an old financial system that is showing some really deep structural cracks and these powerful new technologies like AI and crypto that are super promising, but also really volatile and disruptive. And it all leaves us with this one big, crucial question to think about. In a world like this, where do you even begin to look for stability,